Monica Long sits down with the CEO of the NASDAQ, Adina Friedman, to talk about the tokenization future of crypto and financial markets. I did want to first, before we jump into this interview, I did want to set this up. Adina Friedman, this is who you're going to be hearing and seeing today. She did say that the future of the stock market is to tokenize everything. This was a few weeks ago. Listen closely, and then we'll get into this live interview.
So this morning we announced that we're going to be bringing tokenization into our markets. So making sure that equities are tokenized and traded on market, in the markets, not in a side sleeve, but actually in the core markets.
So the eventual goal, or is it today? 24/7, 365 equities, just let it rip constantly.
I mean, I think we are all moving in that direction. We announced several months ago that we're moving to 24/5, so we're kind of moving that way.
So Saturday and Sunday,
not for equities yet. I think that we have to. We're walking before we run, but I think that getting to 24/5 is a major advancement for the U.S. equities markets. And then on top of that, now with tokenization, if we can introduce that also into the markets, it allows us to really think about streamlining the post-trade processing, bringing and modernizing elements of the markets that have a lot of friction. We are hyper resilient and we're hyper scaled. We manage, like today, we had 95 billion messages come into our systems today, and we had a median, return time of 20 microseconds from order to trade. We handle like 3 million messages a second. It's hugely scaled. But then at the same time, once that trade occurs, there's a different process. And then the post-trade process, as we know, is an area where tokenization really shines.
Basically, the stock market, the bond market, the derivative market, it's all going to be processed via blockchain. So that's who you're going to be hearing speaking live with Monica Long. Let's jump right in. I'll give you the feedback when I feel it's necessary to stop and give you some context. Let's go. All right, Ripple Swell.
How are you?
Fine, thank you. How are you?
How has your 2025 been?
It's been
quite a
full
year.
of action.
Yes, to say the least.
Exactly.
So, Adina, I think everyone here would be very interested in your perspective on, the markets this year. It's gone through a lot, lots of shifts in macroeconomic conditions and investor sentiment. So, from your perch, how do you see it? How do you see it? How do you see blockchain and digital assets fitting in this moment?
Yeah, well,
Great
first
question.
of all, the capital markets have been very active this year. And there are a lot of different themes that you're seeing flowing through the markets. Obviously, the AI trade is really coming into the markets in terms of not only the potential, but the reality of AI and how that's driving earnings growth within a lot of the large tech companies. And that is, of course, then driving market performance. And when we look at the NASDAQ 100, for instance, we've been looking at the performance of the NASDAQ 100 since the beginning of 24, which is really when AI started coming into the financial performance of the companies. And the growth of earnings, even before this quarter's results, was 32% growth in earnings if you look at the large tech companies. And the market performance of the NASDAQ 100 has been up 47% over the same period of time. So in my opinion, they're earning their returns. So and the NASDAQ 100 today is an $800 billion index product, or an index that it really underpins a lot of the financial system. So we're really, really pleased to see that. So you got the AI trade. You obviously had the macroeconomic, swings, which is obviously creating some volatility in the markets. And then you have crypto. And when we look at the 2025 IPO proceeds raised so far this year, 15% of the IPO proceeds have been in the crypto digital asset space.
Yep.
When we look at number of companies that are now crypto and digital asset companies in global markets, there are about 84 companies now in the space that are listed in the markets broadly, of which 74 are listed on NASDAQ. We're very proud of that. And then when we look at the pipeline, the immediate pipeline of companies wanting to come out, either through IPOs or SPAC combinations that have already been announced, there are about 17 companies that are waiting to come out immediately. We obviously are sitting in a government shutdown right now, which is slowing things down a bit. But of those 17, I think either 12 or 13 are coming to NASDAQ. So we're really, really proud of the way that we're supporting the crypto ecosystem and the digital asset ecosystem just through our listings.
Really quickly, so as regulation is becoming more clear, Financial institutions know that this industry is only going to get bigger and bigger over the next few years. When you have the Treasurer of the United States coming in saying the stablecoin market could grow to 5 to 8 trillion or whatever the number was over the next few years, people starting to take notice, right? They understand the opportunity here. And so you're starting to see all of these acquisitions. You're starting to see the Visas, the MasterCards, the Ripples, the Coinbases, the Circles of the world starting to either IPO or are acquiring companies and infrastructure because there's only so much right now. And you are seeing a lot of companies starting to raise money because everybody's paying attention right now what's happening in the crypto market, be it what's it through custody or tokenized assets or stable coins, whatever it is these financial institutions are interested in, they are going to be buying more and more companies going forward. And we're just seeing the start of that in my personal opinion. Let's continue.
Yeah, that's exciting to hear that there's this pent-up demand and more are entering.
Yep.
What more can you say about how IPOs are taking shape for, well, we're at the end of 2025, so looking into 2026, what do you expect in the market?
Well, we were expecting a very busy fourth quarter of 2025. The government shutdown has made things a little bit slower because the SEC cannot go through their normal review processes for IPO listings right now. So the companies that have already either cleared comments or have gone through the majority of their comment review are working their way out through the system through a mechanism that the SEC established. But we have a really, really strong pipeline of companies, well over 70 companies that are ready to come out, that are just waiting for their time. And so we do expect actually some to come out hopefully in the last month or so of the year. And then we normally do not see a busy first quarter just because of the way that the financials work. But we are expecting actually a pretty busy first quarter just because of the fact we've had some delays in the fourth quarter.
Okay, okay. I know something that you've been passionate about and spoken about is making that process a bit easier while still protecting investors. So what tangible progress has been made in making it easier for companies to IPO?
Yeah, well, as Chair Atkins likes to say, let's make IPOs great again. And I think that's great. So we've been advocating for some foundational changes in the public company experience. And one of the things that we've noticed is obviously the public markets continue to be the biggest and broadest markets in the world, but the private markets are becoming very, very active and very large as well. And so there is a huge difference between being a private company and being a public company. And there are some reasons for that, very valid reasons for that. If you're opening yourself up to billions of investors who are putting their hard-earned savings in to invest in your company, there should be certain transparency and elements of the public company experience that are different. But our view is that it's gone a little too far. So there are 3 areas that we're focused on. One is disclosures, and we do support the notion of moving from a quarterly disclosure regime to a semi-annual disclosure regime, and that is something that both the President and the SEC have indicated support for. The second is also just paring back on some of the disclosures that are not really needed for investors to make informed investment decisions. And then the second area is on proxy reform. There's a whole host of things in the proxy area that I think we could spend an hour on, but there are some very tangible changes there that we're advocating for. And then the third is litigation reform. And I do want to note that the Commission did approve a change to say that IPOs can put in their S1 a requirement for a mandatory arbitration as opposed to a normal class action process for shareholder disputes. But it also has to team up with a state law. And so there's some areas in state law that we're also working to address to make that a reality. So it's a lot.
That's a lot, yeah. A lot of meaningful progress. So if we were to play a word association game with NASDAQ, I think stock exchange probably would be the #1 bubble in the word cloud. But your business model's changed so much. So can you tell us about what NASDAQ is today?
Yeah, well, so we are really a technology company that serves the global financial system. And we obviously start with our markets, and we're really, really proud of the markets that we serve. So we have our U.S. equities and options markets. We are the deepest pool of liquidity in the United States for equities and the largest multi-listed options markets in the U.S. We also operate on the markets across the Nordics, and we continue to focus on market modernization. So we're rolling out our next-gen trading technology. We're moving our markets into cloud technology. And we're also providing technology to 130 other markets around the world,
Wow.
including crypto markets that use our technology, trading, post-trade, surveillance, and other solutions. So that's kind of a market modernization theme. Then we also have what we call, managing the innovation ecosystem, and that's where our index business, our listings business, and the things that really kind of underpin the innovation economy really sit. And then the third pillar for us is building trust in the financial system. So we have an anti-financial crime technology that serves 2,700 banks. We have surveillance technology that serves the largest broker-dealers around the world and exchanges. Central banks use us for trade infrastructure and risk management. And then regulatory reporting technology through XMSL is the broadest and biggest suite of technology solutions for regulatory reporting. So kind of think about that trust, think about liquidity, and think about transparency. Those are the three themes that we really focus on.
And so bridging what exists in the world of traditional finance, traditional capital markets with the world of crypto, you're saying, you're now underpinning some of the crypto markets. Where do you see blockchain really making an impact, even to traditional capital markets?
Yeah.
Like, where's the value?
Well, I actually think you brought it up. I was watching you before. So if you think about post-trade, there's a lot of inefficiencies in the post-trade processes across every asset class. And there's some reasons for it. I mean, so we have to recognize that sometimes there's some friction for a reason. That could be for risk management, could be for netting, it could be for allocations, things that we have to address and modernize. But we do think blockchain technology can really streamline post-trade processes across the world, which then, of course, frees up capital. So if we do it right, we can actually make that an opportunity to deliver more capital into the system. The second is collateral mobility. So I know that Ripple's really focused on that, and so are we. So we have Calypso as our trade infrastructure technology for the banks and broker community. And in that, we have collateral management, which I would say is the most used module within that solution in terms of optimizing for collateral. But what we really love about the idea of digital assets is being able to move that collateral in a much more seamless way. If we can create that collateral mobility that Ripple is so focused on, we're focused on, it will free up a lot of capital. I mean, there's just so much capital trapped.
Does it feel like maybe there's going to be some type of announcement maybe between the NASDAQ and Ripple in some kind of way? There's a lot of people that speculate that Ripple and XRP will be part of the settlement layer for the DTC, right? The DTCC. What is that going to look like going forward, right? And how much of a market will they be able to accomplish as when you have the CEO of the NASDAQ, this is one of the head decision makers. Can we agree on that? I'd imagine there's going to be a board of people, and all of those people have managers that report to them, and they're kind of telling them what the best infrastructure, best partners are. And when you have the CEO making her way to the biggest Ripple event of the year, and they're basically the first the first iteration here of this interview fireside chat, this is what really kicks off Swell. I start to wonder if there's more, if there's something else, another shoe that's going to drop here that we're waiting on between Ripple, NASDAQ, or some of the partners behind supporting infrastructure here. I wouldn't be surprised if in the next few months, maybe in the next few weeks, we start to get pieces of that. I will bring you everything I can. If it comes out, I'll bring it to you.
In clearinghouses or clearing brokers, that I think could really be freed up if we kind of create an ecosystem with digital assets as the underpinning. And then the third area is in payments, and that's an area that I know Ripple is extremely focused on. We're not a payments company, but we care about payments just in terms of having that free flow of capital around the world and allow investors to be able to express themselves globally in a frictionless environment. And so we're very, very focused on that as well.
And that freeing up of capital, we're talking about that, like in terms of market impact, that would be orders of magnitude.
Yeah, I mean, I would love to. I know I've seen the number before. I mean, we're talking hundreds of billions, if not maybe even $1 trillion of capital that you could free up if you can move it more seamlessly, if you can streamline post-trade processes, and frankly, if you can just manage payments in a much more frictionless way.
It's a massive opportunity. So you recently filed with the SEC to support trading tokenized securities. So we're going to talk about that. What motivated this decision, and what does it mean for NASDAQ's strategy?
So this was the clip I played just before we started this interview when they're talking about moving towards blockchain settlement for the NASDAQ, all right?
Well, I think what motivated the decision is not that we see, we actually think that the US market, the equities markets are extremely efficient. So it's not that there's like fundamental efficiency issues in the trading of US equities. But the post-trade process, we do think could be streamlined. And we also want choice. I mean, it's really a matter of giving investors more choice. Investors are starting to manage their investment accounts in digital wallets. They want choice to be able to trade crypto security or crypto assets, securities. They want to be able to express themselves in prediction markets and other things. And they want that wallet to be able to facilitate all of that choice. And they don't want to have to move back and forth between digital fiat and traditional fiat. So we want to make that choice available to them, but changing the nature of the underlying security, not creating a wrapper with a derivative on it, because what we don't want to do is hive off liquidity into trapped pools and frankly hollow out the liquidity of the overall markets. One of the things that makes the US markets special and unique is the depth of liquidity and the confluence of investors, retail investors, institutional investors, hedge funds, all coming in and contributing to price discovery. So what we've filed for is to say, look, we manage 3 million messages a second.
Wow.
In our US equities markets, we're probably managing anywhere from 3 to 5 billion messages just inbound into our systems every day. In options, we're talking about 80 to 130 billion messages in our systems every day. So these are very, very scaled systems. But the post-trade processes is where we really want to focus. So we're teaming up with DTC to be able to create choice. So you put a flag on an order.
Teaming up with DTCs, right? This is where we're going, right? These are the connections that we built over the last few months. I've shown all this to you.
Coming into the market that says, I want to settle this in a tokenized form. DTC takes that flag and basically, upon execution, and basically routes your settlement through a different decision tree. Think about it that way, and through a different process into a digital wallet. You want to sell that security, goes back up into DCCC, and it can settle in fiat. So it really allows the investors to have that choice, and we're very excited to be teaming up with them. We do want the actual CUSIP itself to be transformed into digital form versus traditional form. So it's not a matter of changing the nature of the security. It's a matter of making it so the security itself is tokenized.
That's exciting. That's a real
Same thing that Larry Fink has been saying, right? When you're going to have this digital CUSIP where everyone's going to have their own number and everyone's going to know who owns what and what their voting share is and all of those things, it'll all be via blockchain. So it's interesting to hear Larry Fink and the CEO of NASDAQ using the same type of terminology here for what they believe the future of markets will be. And I think we definitely probably should listen to them since they are the ones, they're going to be the deciding factors on what happens here.
Reinvention. Genius Act addresses stable coins, but there's more work to do on regulatory clarity, I would say. So
Clarity Act.
What would need to take place to pave the way for
Great
that
question.
to come to life?
Wow.
Well, we are really pleased to see that the government is focused on it very holistically. You've got the legislative branches really focusing on how to put the right regulatory guardrails around stablecoin as well as around the markets, and as well as the SEC and the CFTC coming together. And I've been at NASDAQ, I started at NASDAQ 32 years ago. I've never seen the SEC and the CFTC work as well together as we're seeing right now.
That's amazing.
It really is, we should be very thankful for that moment because there is a convergence of asset classes. There is a convergence of retail and institutions expressing interest in trading all these asset classes. And yet there is a very different regulatory environment for securities versus derivatives. So how do we create more convergence of the regulatory framework that covers all asset classes, but including crypto? And then also, how do we support innovation while still managing and really, really focusing on the North Star, which is investor protection. So I think that's the one thing that we kind of drumbeat constantly down in Washington. Investors, investors, investors. This is about creating a better investor experience, but also providing the right investor protections. And so let's frame the framework that we really focus on is modernizing the infrastructure while protecting investors.
Could you see initial coin offerings being a part of the picture, a part of the future for NASDAQ?
Yeah, I mean, I would look at it as more, I just think about it as more as tokenized equity issuances.
Okay. Yeah.
As opposed to initial coin offerings. Because I think that's a little bit different. So tokenized equity issuances, yeah, I can see that being a future for the markets. I think let's start with post-trade. Let's get the securities, the underlying QSIPs in a tokenized form. Let's allow them to sit in digital wallets, because that will then, I think, will kind of move up through the system.
So the most important thing here is what for to understand is post-trade settlement, being able to get some of these securities, tokenize them, bringing them on blockchain, help with the settlement of those assets. The question I have, the thing that's boiling in the back of my mind here is, how do you do this? Do you do like 5% a time, right? Or is there a moment where you just bring everything and you tokenize everything on the same day? And so this market now is tokenized, right? Because if you're going to have these markets split up where 20% is tokenized and 80% is traditional, that's not a really good system, because things won't be able to flow. We don't know if this is digital, this is not. That's what I'm wondering here, right? Is there going to be a moment, a flip of the switch, if you will, a light goes on a day that all of this goes towards blockchain, go towards settlement, go towards post-trade? That's what I'm thinking, man. I'm thinking it snaps and we go, and that's all she wrote.
And back up into then how do we actually issue the security? How do we make that initial listing available in a digital wallet? So, but I think we have a ways to go. And I would also say we want to do it the right way. We just have to recognize that our U.S. markets are incredibly resilient, extremely scaled, extremely inexpensive for investors, and highly liquid. So we just don't. Let's keep that. Let's keep all those great things, and then let's put the technology in where we can actually reduce friction. Does T+1 settlement need to exist over the long term? No. But we have to think about how to create T0 settlement without actually forcing grossing up of positions, because that'll actually be very capital inefficient. So how do we kind of allow for this innovation to come in a way that enhances the investor experience but doesn't have unintended consequences?
This view of the blended system certainly aligns with how we think the future will play out. And you were taking a very forward-leaning approach to it, and you mentioned working with DTCC, which is really encouraging. But can you give us a temperature check of the rest of the world of banking and other kind of major legacy institutions who would also need to be a part of the picture?
Yeah, I mean, so first of all, the banks continue to be obviously an enormous component of the economy, and I think that they've also lived through a lot of issues in the past,
crises,
and they are informed by their experience. So, and that they are informed by the experience of the fact that when you do not have regulatory clarity, you can make mistakes, and then people will look back on those mistakes and then suddenly kind of overreact sometimes, frankly, with regulation. So they are really seeking regulatory clarity. If they have regulatory clarity, they understand the rules of the road, they understand that the rules are there with the investor protection as kind of the North Star, then they can work within those rules. And I think they're all expressing an enormous amount of interest in getting more engaged in the digital asset ecosystem. Obviously, they're doing a lot of work already to tokenize fixed income, tokenize bonds, create stable coins. I mean, you're seeing actually a lot of activity within the banks themselves to get engaged in the ecosystem. But I think to get them really engaged in the markets, there has to be regulatory clarity, and I think that will make it so that it accelerates the institutional adoption.
So what we're talking about here is, over the last few years, under the last administration, institutions couldn't go to the SEC and actually get advice, right? We're looking to do something. Is this going to be okay in the scope of what we want to do? And are we going to be under, is there going to be an issue with regulatory uncertainty here with what we're trying to establish here? And Gary Gensler wouldn't answer anybody's question. And when people came in to register and ask questions, they used that information to then go after those companies. That was not at all the way to move forward. And you need this regulatory clarity between the SEC and the CFTC working together. That is something that we should have, right? We should have our regulators not fighting each other for, ground and who's going to do what. But how can you guys make markets more efficient? How can you protect consumers? How can you upgrade this infrastructure and rulemaking to allow this next evolution of financial technology. And I think that's very important where we are today, versus where we were 12 months ago. I think we've come a long way, but there's still a long way to go.
Of digital assets in general.
I think that puts a great bow on the conversation. You've been so wonderful. Thank you for being here.
Great, thank you. Thank you very much.
Love that. All right, guys, I'll bring you tons more information, interviews, my personal beliefs and what I'm feeling, what I'm seeing here. Make sure that you're following the channel. I appreciate you. I hope you're learning. I hope you're growing. That means the world to me. Have a truly fantastic day. Let's go. Ripple Swell 2025. More to come. Peace.